Have you ever wondered how people make money by trading currencies? It sounds a bit like something from a spy film, doesn't it? Men in sharp suits staring intently at multiple screens shouting things like, "Sell the yen!" Well, am here to tell you it's not nearly as dramatic, and you don't even need the suit, thank goodness. Today, on this glorious day of October 26th, 2025, we are going to pull back the curtain on the world of Forex. I promise that by the time we're done, you'll be ready to place your very first practice trade. It sounds mad, I know, but stick with me. We'll have a bit of a laugh, learn a thing or two, get you started on this rather fabulous journey, and let's get this show on the road. Your first trade is just a few minutes away. So, what is this mysterious Forex I keep mentioning? It's short for foreign exchange, which is just a fancy way of saying swapping one country's money for another. It's like when you go on holiday to Spain and have to change your lovely pounds into euros. You're participating in the Forex market. The only difference is, traders do it on a much grander scale, hoping to make a profit from the ever-shifting values. It's like a giant global party that never stops, with trillions of dollars dancing around every single day. We're talking about 6 trillion. That's a 6 with 12 zeros after it. It makes my lottery winnings look like pocket change. It's bigger than all the world's stock markets combined. And the best part? It's open 24 hours a day, 5 days a week. It kicks off in Sydney, then moves to Tokyo, then London, and finally wraps up in New York on a Friday evening. The first thing you'll see everywhere are currency pairs like EUR/USD graphic, EUR/USD with arrows indicating base and quote, or GBP/JPY. It looks a bit like a maths problem, but it's just two currencies being compared. The first one is called the base currency. The base, think EUR, is treated as one unit. And the second is the quote currency. The quote, think USD, shows how much the base is worth. So, if EUR/USD is at 1.0800, it means 1 euro is worth 1.0800 US dollars. Simple as that. You're always buying one currency while selling the other. Now, let's get to the nitty-gritty of buying and selling. You'll always see two prices listed for any currency pair. The bid price is what the broker will pay you for the base currency. It's the price you sell at. The ask price is what the broker will sell the base currency to you for. It's the price you buy at. A simple way to remember. You buy at the higher ask and sell at the lower bid. The small difference is called the spread. Right then, you can't play the game if you don't have a pitch to play on. In Forex, your pitch is a trading platform. This software lets you see charts and analyze markets, and most importantly, place your trades. MetaTrader 4. MetaTrader 5. Tried and true workhorses, like a reliable old Land Rover. TradingView, gorgeous and user-friendly beautiful charts you can draw on. Before you download anything, open a demo account, a practice account, a playground, fake money, virtual cash, monopoly money. You can trade, you can make mistakes, you can have a disastrous day and lose a pretend fortune. It won't cost you a single penny. Best way to start. To get one, choose a broker. A broker gives you the platform and market access. Pick one regulated by a proper financial authority. Section 5. Reading the tea leaves. A beginner's guide to charts. Welcome to the art gallery of Forex. Looking at a trading chart for the first time can feel like being at a modern art exhibition. You're not quite sure what you're looking at, but you know it's supposed to mean something. The most common things you'll see are called candlesticks. They look like little rectangles with lines sticking out of the top and bottom. Each candle tells you a story of what the price did over a certain period. If the candle is green, it means the price went up during that time. It closed higher than it opened. Hooray! A happy green candle. If the candle is red, well, you've guessed it. The price went down. It closed lower than it opened. A sad red candle. The main rectangular part is called the body, and it shows you the opening and closing price. The thin lines, wicks, or shadows show the highest and lowest points the price reached during that period. So, in one little candle, you can see the opening price, the closing price, the high, and the low. Next up, you can change the time frame of the chart. M1, 1 minute, H1, 1 hour, D1, 1 day. This simply changes the story. Each candle tells you. On a 1-hour chart, each candle is 1 hour. On a daily chart, each candle is a full 24 hours. 1-minute charts feel like an action movie. Daily charts, a slow-burning drama. As a beginner, start with longer time frames like H4 and D1. Section 6. Your first trade. Let's press some buttons. The moment has arrived. The tea has been brewed. The stage is set. It's time for your grand debut. We are going to place your very first trade on your lovely, risk-free demo account. Don't be nervous. There's no real money involved, so the worst that can happen is you learn something. Open up your trading platform. You'll see a list of currency pairs. Pick one, EUR/USD. Bring up the chart for EUR/USD. Take a moment. Have a look at the candles. Does it look like it's generally going up or down? Make a guess. It doesn't have to be perfect. Open a new order, new trade. Find and click the new order button. New order window pops up. Don't panic. We only need a few fields. Direction, buy or sell. For this exercise, we'll buy. This is how you decide how big your trade is. For now, set it to 0.01. This is the most important part, so listen closely. Set up safety nets first. Stop loss box. Take profit box. Stop loss. Automatic exit if price moves against you. Take profit. Automatic close to lock profit. Aim for at least a 2.1 reward to risk. Then click the big buy button. Section 7. The Golden Rule. Don't bet the farm, or even the garden shed. Now that you've had the thrill of placing a trade, let's have a very serious but still friendly chat about risk. This is, without a doubt, the most important lesson you will ever learn in trading. The number one rule, the golden rule, only risk a tiny fraction of your account on any single trade. Specifically, 1%, 2%. If you have a $10,000 demo account, 1% is $100. So the absolute maximum loss on one trade is $100. Not a penny more. This is what your stop loss is for. Set it so a hit costs $100 or less. This is non-negotiable. It's the seatbelt of your trading car. Why so small? Because even the best traders are wrong. A lot. They lose trades all the time. The difference? Losses are tiny and manageable. Wins are larger. Risk to reward. Sounds technical, but it's simple. Risk $100. Aim to make $200 or $300. If you risk $100 to make $200, you need to be right only 1/3 of the time to break even. Any better, and you're profitable. This math is the secret sauce to long-term success. It takes the pressure off being right all the time. Be patient, be disciplined. Always use a stop loss. Stick to 1-2% risk. Don't let emotions win. Well, look at you. You've made it all the way to the end. We've gone from wondering what on earth Forex was to placing your very first practice trade, currency pairs, spreads, leverage, the wild ride, the demo account, the absolute necessity, candlesticks, support, resistance. Most importantly, we've had the serious talk about risk. Always risk only 1-2% and use a stop loss. You now have the fundamental building blocks to start your trading journey. The key now is practice. That demo account is your new best friend. Use it. Play with it. If you enjoyed this, subscribe for more trading guides and tools. Open that demo account. Spend a few weeks. Place at least 20 trades, all with proper stop losses and take profits. Be proud of what you've learned. Take that first step. Go on, the market is waiting. You've got this.